Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong life for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. There you go. Welcome along, folks. Good to see you. Forgot to change the heading from yesterday, but there you go. It's not the 5 big weapons of wealth today, but anyway, we'll see how we roll. Good to see a few of the early birds there. Good morning. As we're warming up, do the quick intros while we get ourselves ready for this wonderful Wednesday, 6th of December. Crikey. It's already here. Jason Witten's my name. You guys know that. If you didn't, and if you don't, and if you're new, welcome. Hello. Fantastic to have you here. If you're here for the first time, then what's this all about? Well, we're mad keen property investors around here. And we get together each morning, a bit of a wealth coffee chat, just to talk about what's going on out in the world of property investing. So that's the drill. That's the gist of it. So welcome along. Good to see you, Kevin. Alex, good to see you here. Thanks for joining, as always. Fantastic to have you along this morning. I thought we might talk about something that happened yesterday. I mean, none of us were holding our breath, but we were there, curiously watching what was going to happen. What happened yesterday? Chuck it in the chat, folks. Tell me, what happened yesterday? Something on the horizon for us as investors, worth understanding, worth having a look at, certainly worth thinking about, what next, what's going on, right? And yesterday, the interest rates paused. If you weren't paying attention, then it happened. Yesterday, the interest rates paused. Now, they'd been paused for a little while prior, and then the RBA put the rates up. I think they've cooked it. They've overcooked it. You guys know this. I've seen it out there in the marketplace. Anyone who's in business or doing work out there, you can see, 3-4 months ago, the market really, morning, Paul, the market really slowed down in spending and consumption and people and jobs. Like, we've got a couple of jobs going at positive, and, we've had more applicants in the last month than we had in the whole year beforehand. So, it's happening. It's working. RBA always overcooks it. I think the new RBA crew decided they'd just stick one in there before Christmas, a little rate rise, and, try and establish, hey, don't spend too much money. We're watching. So, but anyway, what does that mean to us as property investors? Well, the big question is, does it mean anything? All right. And for me, for you, well, let's have a look at what's going on and, have a bit of a think about where we are in relation to the long-term, medium, and, what's on the agenda, what's going on. Now, I'm going to do a quick Wealth Coffee Chat today, folks, because I'm traveling off to Sydney. I'll be out of action for a couple of days, so I won't be on the Wealth Coffee Chats for Thursday and Friday. But I'll be down learning some things, and I'll bring them back to you soon, let's say on the following Monday. So, yeah, let's have a look at this. The cash rate, long-term average cash rate sits at about 5%. We had a 0.1% cash rate not so long ago, the lowest in history ever, right? So that wasn't going to last forever, was it? And now we're back up around where we probably need to be. I think it's a bit high, but we shall see, folks. We shall see. What's going on? Well, the RBA paused the official cash rates yesterday. That's fantastic news for mortgage holders, especially owner-occupiers who are struggling a little bit with their mortgage payments. But in the future, we've got some interesting things happening that we as property investors need to get our handle on, right? Now, they might get out there and, maybe poke at poke it one more time, but I don't think so. Sam called it the other day. He bet $5,000 that their rates wouldn't go up, and they didn't. So well done, Sam. But there you go. CPI, the thing we've all been watching, is on the way down. And the latest predictions are talking that by the end of 2024, folks, by the end of 2024, which is literally starting soon, we'll be down around 3 to 4% and well within the range that the RBA wants it to be for inflation, right? Inflation. Now, the big question, the big thought, the big what's that mean to you and I as property investors? Put it in the chat. What's going to happen as inflation goes down, folks? Things are still pumping along as in the real estate game. So what happens? What's going to happen when inflation goes down? We've talked about this probably ad nauseum. Property prices are still going up or maybe going flat a little bit, but what is going to happen? Yep. And I think it'll kick on for sure, Alex. I think it'll kick on for sure. Alex has got boom there. I think we'll get growth for sure. I think we'll get price growth. I think we'll get rent growth in the next 12 to 18 months, driven by the lack of, folks, the lack of supply. Look at this. I just saw this the other day. This is always the interesting thing, right? You gotta check in on the media. They're like the median and then the average. They're different, folks. They're different. Okay, they're different. Like, and then you go, okay, well, records average price 862, and then if you go over here and check out RP data 704, which one do I look at? Well, median is different to average, right? So anyway, that's why you got to check in on these damn newspapers, because they just use things that aren't necessarily consistent in our stats. But, a record price, new house record price, well, that's saying something, isn't it? Right? Paul is saying, hey, if interest rates go down, people will start spending. Yep, that'll help. More importantly, when it comes to the world of property investing, Paul, when interest rates go down, your ability to borrow goes up, folks, goes up, right? And more importantly, if the interest rates go down and the rents go up and your wage goes up, because there's some wage pressure as well, what's going to happen? Last month you could borrow 600,000, and what's going to happen? Let's say mid-24, you can borrow 800,000, right? So that's what will happen, right? And it's, cheaper to buy than rent in these places. But, if interest rates go down, all of these places, the big places, will become cheaper to buy than to rent. If your borrowing power goes from 600,000 to 800,000, are you gonna sit there and you're gonna borrow 600,000? No, that doesn't happen. Doesn't happen ever, folks. I've never seen it where someone goes, "Oh yeah, I know I can borrow 800, but I won't. I'll buy a lesser house to live in." Right? Tell you, it's not going to happen. So there's going to be more people capable of buying property in the market, and what's going to happen? Our supply is down. Our supply is rubbish. It's collapsing, and that's not even. That's just the approvals, folks. You wait till you try and see what actually starts out there. So new construction, absolutely shit itself, fallen off the cliff. That won't fix itself for 3 to 5 years. If you're lucky, we've got our population, immigration going to be at record highs, record levels for the next 2 to 3 years as well. And then the turnover of existing property. Look at this. Crazy, folks. Like down, down, nothing, bugger all coming through. So There you go. We've talked about this multiple times, but as an investor, what are you going to do about it? If I was you, if you've got the ability to get hold of a deal in the next, 1 to 3, 4, 6 months, then you should. I can tell you, because if you don't, if you haven't seen Sam's webinar from the other night at mentoring, make sure you go and have a look at that one, because the average purchase price of property will increase between $50,000 and $100,000 over the next 12 to 24 months. Now, if you wait too long, you're going to miss out on that. The good quality properties in the secondhand market are being held. Why would you turn over? If I have a property now, if I'm an owner occupier, I'm going, I want to buy a better one, or I want to move, that stock's not turning over, folks, right? It's not turning over. And often the average properties are being turned over and sold. So the secondhand market, even the ones that are being for sale, are often the average properties, more average than fantastic. And the new world, there's a window of things that are under construction or have been approved and started now, compared to things that might be started in, let's say, 2024 and 25, different pricing models and whatever. So interesting time, folks. Don't miss out on doing a deal. All right. Well, listen, that's it from me today. I said it was going to be a short and sweet one. Wealth Coffee Chat over and out for today, folks. I'm not going to be here for Thursday and Friday, but I will be back with you on Monday next week. So until then, you guys know the drill. You guys be good. Take care. And bye for now. See you, folks.